from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, half-dose booster shots of the Moderna COVID vaccine could soon be approved by U.S. regulators. This as YouTube doubles down on vaccine misinformation, banning all anti-vaccine content from the platform. We'll give you a virus update. Plus, the central and lingering question about the chip shortage. How bad really is it? Micron down for a second day after reporting a disappointing forecast. We're going to bring you the latest from the continuing global chip crunch. And instant mobile gaming coming to you from the Sway House. The notorious TikTok group is betting big on in-app gaming, pushing further into the metaverse. How content creators and influencers are doubling down later this hour. We'll get to all of that in a moment, but first let's get a look at the markets with Bloomberg's Kriti Gupta. Kriti, what are you tracking today?
Well, Emily, a choppy session in the markets, and as we expected, we had a two-day sell-off, so you did see a little bit of a bounce, at least at the market open, but then quite a bit of a fade, the S&P 500 ending just shy of 0.2%. So what was behind it? On a sector basis, those yielding sectors actually did pretty well. Utilities, consumer staples, especially when you have yields actually lower. It looks like they've changed just given the aftermarket action, but during the session, yields were down quite a bit. So, and tech down with it quite a bit. They ended up actually becoming the make or break case, Emily. So intraday, when the S&P 500 went negative, it was due to Apple. When it ended positive, it was due to Apple. We'll get to that in a second. I want to show you what this looked like in a different way when it comes to ETFs, because take a look at this terminal chart. It really shows you the pain that you're seeing in some of those ETFs that really focus on that tech trade. It's been a couple days of some pretty intense selling. If you look at the ARK Innovation ETF, for example, or the NASDAQ ETFs that track that index, really crucial to talk about that selling pressure, especially as we're at the end of the month. But let's go back to Apple, because the supply chains are really crucial. We're talking about that. Actually, it looks like, you know what, I forgot that we have a different chart, but you know what, I'm going to send that to the end of the hit. Let's talk about momentum in the biotech space in particular, because when we go to that sector basis, it's biotech, it's semiconductors. That's what we like to look at, electric vehicles even. But after that initial vaccine surge that we saw after the market crash last year, it actually ended up losing some of that momentum. That's what you're seeing in that white line over there. So Emily, let's see if that pattern continues or if these new booster shots actually help biotech regain some of that steam.
All right, Kriti, thank you for that roundup. Well, U.S. regulators leaning towards authorizing that half-dose booster shot for Moderna's COVID vaccine. Bloomberg has learned the FDA is satisfied that the booster is effective in shoring up protection. The U.S. has already okayed the Pfizer-BioNTech shot as a booster in its full-dose form. Bloomberg's Josh Wingrove with us now for more. And Josh, you broke this story. What does a half-dose actually mean, given that Pfizer is a full dose?
Well, the doses were different to start, and that's sort of why we're now entering these sort of territories. So Pfizer was 30 micrograms, and their second shot was that, and their booster was that. Moderna was 100, and so even at a half dose is a stronger dose, and that's part of why there are signs that Moderna has been holding up better than Pfizer has, although both are still holding up pretty well. So it looks like in the coming weeks that this is trending towards an authorization. Right now, of course, the only people eligible for boosters are people who got Pfizer previously and can get a Pfizer booster. This would open it up for Moderna people who could get a Moderna booster. And maybe sometime down the road we'll know more about Johnson & Johnson, or if we should, change tack entirely and go to a mixed booster sort of scenario. But, we're getting there eventually, but we're not there yet.
Right. If indeed this is approved, would this open up the folks who are eligible for a booster shot or for whom a booster shot is recommended?
This would mean tens of millions of people, more people would be eligible, because it would probably be similar groups to who are eligible now just for Moderna. For instance, people like Anthony Fauci, the Biden advisor who got the Moderna shot. He would be eligible if he had Pfizer because he's over 65, but he's not eligible because he had Moderna. So people like that would be presumably eligible, people who have underlying conditions that put them at greater risk. And of course, that group that was all the controversy last week, people who work in places with high risk of exposure, the CDC director overruled her advisory committee to make sure that those people were eligible for booster shots if they had Pfizer. So all eyes, of course, will be on whether she does the same thing for Moderna. Next step would be adding other groups, for instance, saying all adults are now eligible for booster shots. And, about 15 million people got the Johnson & Johnson shot. Remember, that was sort of supposed to be one and done kind of shot. It looks like there'll probably be some kind of a booster campaign for that as well, but that one is a little more in the medium term.
All right. Well, huge news. Bloomberg's Josh Wingrove will, of course, be watching if indeed regulators approve that. Thank you for that story. Staying on the vaccine front, YouTube has announced it'll remove all content questioning any approved medical vaccine, not just those for COVID-19. This is an about-face from YouTube's historically more hands-off approach. Bloomberg's Naomi Nix with us now for more. So what does this policy cover, Naomi, and what doesn't it cover?
So what it covers is any sort of posts that question, make misleading claims about particular vaccines or question the efficacy. What it doesn't cover is content that might be talking about vaccine trials or scientific results where there might be some ambiguity. It also doesn't cover, and I think this is key, personal testimonials about vaccines. So if a parent gets up on YouTube and says, my child got a vaccine and they had a reaction, that wouldn't necessarily be covered by this policy. But it might be covered if someone puts together a collage of testimonials that question the vaccines. And so it's a thin line, but YouTube is definitely making a more aggressive stance here.
Now, of course, I interviewed YouTube CEO Susan Wojcicki just a few days ago. I asked about vaccine misinformation, what they can do more to combat it, what they've learned in terms of lessons from the pandemic. Take a listen to what she had to say.
Well, first of all, we're always learning. Just to be fair, like we're always thinking about how can we do better. We're looking at the feedback and working with public health experts across the board. I think one of the big things for us is to continue to work with public health experts to understand what are the ways that we can partner with them to get their messages across. And I really believe that that is something that's really changed, is the evolution of bringing creators, musicians, experts talking about public health.
So look, Naomi, there's still, a lot of people out there who think that YouTube hasn't done enough to combat vaccine misinformation. Do you think this is enough? I mean, this does seem to be a huge step further, speaking to her point about being willing to learn and change.
I think the key is enforcement. Will YouTube's automated systems that are looking for this stuff and the humans involved in the process, will they be able to catch all the misleading content that ends up on YouTube's site? And the question is maybe, maybe not. One thing YouTube did admit to us the other day is, look, it's going to take time for this enforcement system to get up and running, and it'll improve over time as they make more and more enforcement decisions.
How does this compare to what Facebook and Instagram are doing when it comes to vaccine misinformation? Do they also pull down vaccine misinformation when it comes to all kinds of vaccines, or is it just COVID focused?
Well, I mean, look, the sites have been making a lot of efforts on the COVID vaccine. And I think Facebook and Instagram in particular, one of the problems there is the anti-vax movement really got a head start on Instagram in particular in its mobilization long before the COVID vaccine came to light. And Facebook has been trying to tamp it down, but not to total success. And so, yeah, this is at a time when other platforms are obviously making similar moves. But I think they're all kind of struggling with this idea of how do we get rid of it all, and kind of admitting that we'll probably never get rid of it all.
How do you think Washington and lawmakers are going to respond to this? Is this going to be enough for them?
Probably not. I think politicians on both sides of the aisle continue to raise questions about whether these platforms are doing enough to curb this kind of misinformation. In particular, lately, one of the lines of questions has been about, are these platforms dedicating enough resources to fight misinformation in languages other than English? And, they're asking the question, recently some lawmakers sent the CEO's letter is demanding answers about how many content moderators do you have who speak, say, Spanish or languages other than English? What sorts of resources are you putting to that? And so I think those questions are going to continue.
These are absolutely global platforms. Bloomberg's Naomi Nix, thanks for that update. Coming up, the chip industry is known for its dramatic boom and bust cycles, and right now chip makers are taking a big hit. Micron down for a second day after delivering a weak forecast. The latest out of the continued chip crunch next. This is Bloomberg. While the largest U.S. maker of memory chips, Micron, plummeted after delivering lackluster results, slowing demand from personal computer makers, hurting the company's forecast. Micron is coming off a record year, but its sales forecast for the current quarter falling well short of expectations. Bloomberg's Ian King with us now. So, Ian, what's the takeaway?
Yeah, I mean, they said the magic word, which obviously is the harbinger of most downturns, and that was, we're seeing, some of our customers have too much inventory and are taking some action, cutting back orders to try to, pare down that inventory. And that, as you know, is what terrifies people. Micron said, don't worry, the orders are coming back. This is just a temporary thing caused by other shortages. But they said those words, and that was enough for a lot of investors.
Well, there have been concerns about hoarding. There's been some fogginess as to just how bad the chip crunch actually is, how much longer it will go on. What sort of answers are we getting to those questions?
Yeah, I mean, we're getting explanations from companies like Micron who are essentially arguing, look, things are different now. This isn't like it used to be in the past. We're not going to come crashing down. Don't worry about it. The demand is still there. And, that's reassuring. But then when you look at the multiples on some of these stocks and the amount that they've run up, investors, are not going to be patient here. They're not going to put blind faith, and they're going to use the traditional pattern recognition.
Now, we know that consumer electronics have been impacted badly, phones, computers. You've also been looking at the car industry in particular. How is the chip crunch continuing to impact car makers?
Yeah, I mean, you look at most companies, whether it's electronics, automakers, whatever. When are these shortages going to, ease? When are we going to get back to whatever normal supply looks like? And nobody's saying that we're going to be back to whatever normal is anytime before kind of the middle of next year. And even then, for sectors like automotive, perhaps even later than that. There's so much going on in that industry. It's changing fundamentally at a time when it just can't get the supply that it needs.
So take me out a year then. What's going to be the major chip story a year from now? Will this be mostly behind us, or will there be some other problem?
Yeah, I mean, it really depends on who you talk to. I mean, one of the biggest concerns is like, hey, we're going wild. We're building all of these plants. We're worried about all of these shortages. Maybe this time next year, we've got a glut and all of the chip industry is in big problems with massive amounts of industry and lower prices. Listen to some of the chip-making CEOs, and they're saying, look, we're in an unprecedented boom time, and it's going to carry on.
All right, Bloomberg's Ian King, thank you for the update. You know it all. Sticking with cars, Rolls-Royce says it plans to move entirely to electric cars within the next decade. The luxury car maker made the announcement as it's revealed its first EV, called Spectre, will go on sale by the end of 2023. The company's CEO is confident the global chip crunch won't affect its timeline.
I mean, we are very lucky to be part of the BMW Group, and for that reason we are well served with all semiconductors we need. Rightly so, knowing the contribution margins, knowing how profitable our business is, and for that reason we are not running in any way short.
Meantime, Netflix has acquired its first video game developer. The streaming giant has bought Night School Studio for an undisclosed sum. The game developer is best known for its debut title, the supernatural mystery adventure Oxenfree. Netflix plans to make games part of its subscription service with no ads or in-app purchases. To talk about Netflix's gaming strategy, we're joined by Bloomberg opinion columnist Tay Kim. And if we've learned anything, Tay, it's not to underestimate Netflix when it gets into something new. How big do you think they could be in gaming?
I think they could be huge. I mean, in July, they first started saying that they're going to go big into gaming. For years, they've been saying that Fortnite was their main competitor, not HBO. And this strategy is very smart. They see it as a broader thing, entertainment service, screen time, than just video in particular. So eventually video is going to get saturated, and they're looking at the next big thing. And the demographics are switching to video games. All the studies show that the younger generation consider video games their biggest favorite entertainment activity. So Netflix is thinking ahead, and eventually, right now, they're doing the small experimental, buying these small independent developers. But eventually, they're going to go bigger and acquire larger things.
Meantime, you've got a new column out. Of course, we all saw Amazon's Devices and Services event yesterday. They unveiled a slew of new gadgets and gizmos, I should say. But you think Amazon's next big hit isn't Astro, the little robot that rolls around, but actually a video game. Why?
Yeah, so I thought that was a little puzzling yesterday. Like, all the coverage was about this $1,000 Astro robot that doesn't really do much. It's very early, very nascent. It doesn't even have an arm, so it can't really do anything other than be kind of like a home monitoring tool. It's basically like a tablet on wheels with Alexa functionality. The bigger story I think everyone's missing is Amazon quietly released their latest video game called New World. And it's taking off like a rocket. It's doing better than it's ever had before. This is actually Amazon's first major gaming hit. They've had a series of high-profile failures over the last 10 years. And now it looks like they have a real strong foundation to attack this huge market, which is like $176 billion a year. So it's really good news for Amazon.
So we've seen how entertainment in general has changed with big tech companies like Amazon and Netflix getting into original content. How do you think the gaming landscape, the competition in that world changes with Amazon and Netflix being bigger participants?
I think they're going to be aggressive on the M&A side, but also by having this success for Amazon after this series of failures, it also proves to Amazon that they can do this, that their original content division can be successful. So I see Amazon investing billions upon billions of dollars to really attack this space.
All right, Bloomberg's take him. Thank you so much for your insights there. Coming up, we put the focus on public listings as online eyewear retailer Warby Parker makes its trading debut. We're going to hear from Stacey Cunningham, New York Stock Exchange president, on the current IPO pipeline and the path to going public next. This is Bloomberg. Eyewear retailer Warby Parker goes public on the New York Stock Exchange, finishing the day up 36%. The direct-to-consumer company follows a string of other tech firms choosing to go public via direct listing. Bloomberg caught up with New York Stock Exchange president Stacey Cunningham to talk about the IPO pipeline.
Across the board, 2020 was a blockbuster year. We had more IPOs than more capital raised than in history. And then we saw 2021 already eclipsing those numbers. What's unique about this time and very different from what we talk about when we look back at the dot-com era is the breadth of types of companies. And so, as you mentioned, we're seeing internet tech, we're seeing consumer tech, we're seeing healthcare. There's so many different industries going public right now. As the markets have become a little choppier and we're seeing investors become more discerning about which companies they're supporting, the pipeline continues to be really, really strong. Some companies are choosing to wait a few quarters before they go public, but there's still a lot lined up in the short term. And we're excited to welcome Warby today here at the NYC via direct listing. They're also thinking about how they go public, not just when.
Stacey, I noticed you're wearing your glasses. I feel this is appropriate. Let's talk a little bit about the direct listing. You say the markets are getting a little choppier. Does the direct listing become more attractive in choppy markets? Do you think more companies will go down this route?
That's a great point. We're already seeing more and more companies considering a direct listing, but when you're not pricing shares and you're not selling shares into the market, you're a little less concerned about what the market conditions might be. You're allowing investors to price the company, but there aren't new shares being sold. And so it is attractive when markets might be a little bit more volatile. We are seeing more companies choose a direct listing, not just because of market conditions though, because of their priorities. So the cost of capital is significantly better in a direct listing because you're allowing the overall market to participate. And that democratization of access to that initial listing is a really big, important driver for many companies who want all investors to have a level playing field as they hit the public markets.
Hey, Stacey, I hear your point about direct listings, and so you're somewhat immune from the volatility within the markets in some capacity. But if we get the trajectory of like yields really rising and other assets really repricing for that, do you think that that materially impacts the space?
You know, I think not so much for direct listings. It's just the capital markets attracting investors. And there are drivers for why there are so many companies looking to go public. If you rewind back to the spring of 2020, nobody would have expected that we would be in such a busy IPO calendar. But it was very expensive during that time in the early days of the pandemic to raise money in the private markets. And the public markets were providing access to capital to companies who needed it urgently, desperately, and they needed it really efficiently. And the public markets were really on display. So now we've seen a lot of companies recognizing the value of the public markets. Yes, certainly interest rates are playing a role in that as well. But there are companies that are looking to be public because they're not quite sure. I mean, we're coming off at a 10, 11-year bull run market where a lot of companies recognize the fact that conditions might not be within their control over a period of time, and they're looking to tap into that capital so they can continue to grow and expand their businesses despite conditions.
Stacey, we're starting to see some SPACs giving back money to investors. Do you think that is a sign maybe that peak SPAC is behind us?
I think peak SPAC is behind us. If you think about the days where we might have a busy day and there were 20 SPACs going public on a single day, I don't think we're going to get back to those levels. There's been a bit of a reset, which is healthy for the market. You're seeing high quality SPACs go to market. You're seeing high quality business combinations get done. But when there are already 400 plus SPACs out there looking for business combinations, I certainly don't think we're going to see an acceleration of those trends. And just like the rest of the market, investors are going to pick and choose the opportunities that they believe are going to deliver them the best returns.
Stacey Cunningham there, New York Stock Exchange president. Coming up, search powered by AI. It starts a whole new engine of possibilities. We're going to talk with Google's Pandu Nayak about the next generation of search results next. This is Bloomberg.
I'm here in the resort town of Wuzhen for China's World Internet Conference. This year, tech tycoons took to the stage with a clear message of support for China's policy initiatives such as the Common Prosperity Campaign, an effort to narrow China's wealth gap and to support small firms and bridge the digital divide. This is all going on under a background of unprecedented regulations in the tech sector, including the 11th hour halt of Ant Financial's IPO, a probe on ride-hailing giant Didi for data security, antitrust investigations into firms including delivery giant Meituan, as well as broader crackdowns on gaming and online finance. As one analyst we spoke to put it, China is clearly not interested in developing a big tech ecosystem that replicates what it sees as the failures of Silicon Valley, but rather one built around common purpose to serve the growth of China's digital economy and the general population. There's certainly been a very distinct change in atmosphere this year. In past forums, we've seen all the heavyweights in the industry, including Alibaba founder Jack Ma, Tencent founder Pony Ma, as well as international CEOs such as Apple's Tim Cook and Google's Sundar Pichai. None of these household tech names were in attendance this year, though we did have Tesla's Elon Musk address the conference over video and a number of high-level executives from Chinese tech giants. But the conversations at the forum has clearly changed from when executives would organize press conferences on the sidelines of the forum to talk about their plans and vision to this year when it was all about how they would support government policies.
Bloomberg's Lucille Liu there, and welcome back to Bloomberg Technology. I'm Emily Chang. in San Francisco. I want to take a closer look at some of those Chinese tech companies. Lucille mentioned Kriti Gupta back with us now. Kriti, what are you tracking?
Well, Emily, let's just take a look at those Chinese ADRs in particular, because they've been such a big part of that tech sell-off today. I mean, just take a look at some of these names behind me. Alibaba down 3%, JD down a whopping 5%, and it really did weigh on the New York FANG index. So on the cover, the New York FANG index really dropping by 0.7%. Let's widen that out, though, and compare that index to those Chinese ADRs. So essentially, U.S. tech versus China tech. You can see U.S. tech in that white line. It does incorporate some of those Chinese ADRs like Alibaba, like JD, but I really want to point out that even as we see Chinese tech, which is that yellow line, really dropping, a lot of that regulatory scrutiny still weighing on those shares. U.S. tech kind of stagnating a little bit. That growth rotation that was really powering this sector is starting to fade just a little bit. So let's zoom in on the U.S. tech part of the equation, because in today's intraday session, U.S. tech, your Apples, your Amazons, your Microsofts, they were the make or break case for the U.S. stock market. And with it, they took their supply chain. So you can see Apple as this case study, the Taiwan Semiconductor manufacturing company, Qualcomm, Skyworks, all down on the day, in line with that tech trade, in line with that kind of risk-off momentum, but not as much as your Alibabas or JDs. I mean, less than 0.5% across some of these suppliers, and Apple actually ending positive on the session. So really interesting to see that if you are a supply chain or in any way associated with a big tech name, you are kind of insulated from that broader move. Something to watch for in the days ahead, Emily.
All right, Kriti, thank you for that roundup. Well, for over 2 decades, Google has made it its mission to make information as accessible as possible to its users. They've been doing that by sorting through billions of web pages in their search index to find the most relevant information. Now, Google is taking a different way of doing things, using AI to better understand the nuances of human language. Google Fellow and Vice President of Search, Pandu Nayak, joins me now. Pandu, thank you so much for joining us. Google has been working on new technology using AI that can understand information across a wide range of formats: texts, images, other kinds of search results. How will this make our Google searches different?
Thanks, Emily. That's a great question. Today, at our Search On event, we announced how we're using MUM, which is one of these milestones in AI, to completely reimagine and reinvent search to make it even more helpful and intuitive to use. So, for example, we're going to use MUM to improve Lens, Google Lens, which already allows you to search by image, but now we'll let it search in this multimodal fashion where you can provide an image and some text that refers to that image, such as socks with the pattern that's in the image, for example. So it's a new way to search. We're also going to be using MUM's sort of deep advanced topic understanding to help you get a bird's eye view of topics and then find you new ways to explore the topic space. And finally, we're going to use MUM to understand the topics in videos so that we can surface related topics that you might want to explore. So MUM is really helping us both change the way you search and to explore the space even more effectively using its sort of understanding of language and the world at large.
You're also working to add more context to search results, in part in an effort to combat misinformation. We saw YouTube take a big step towards this today, taking down anti-vax content, not necessarily content just tied to COVID. I'm curious what else you think needs to be done to combat misinformation, given that a lot of this information can come up in search results.
Actually, we've spent many years now surfacing high-quality content in these areas. And I think we've had a lot of success in doing that. This has been our mission from day one, is to surface relevant results from reliable, high-quality sources. And we've really doubled down on that idea over the last 5 years or so. And I think we're doing a really good job. But what we've started a new effort this year, and with some improvements we announced today, where the idea is that you want to give, not just surface high quality results, but you want to give users more tools to make their own decisions about what to trust or not, and give them that additional context. And so Earlier this year, we launched this feature called About This Result, where you can get more information or descriptions of the result and so forth. Today, we announced that we will soon be expanding that substantially by providing information about what other sites think about this site, related information, and so forth.
Meantime, Google, of course, is being sued by the Justice Department in various states for allegedly engaging in anti-competitive practices to extend its monopoly in search. I'm curious how this regulatory scrutiny is changing how you do your job and in evolving search for the future.
I mean, my own work in this area is to continue to make search as helpful as possible for our users. And that mission does not change here. In fact, it's given that users have even more ways of finding information today from a variety of different sources and so forth, that mission is ever more important today, and there's no change in that.
Meantime, it's no secret that algorithms can reinforce biases that we as humans already have. And there's concern that AI could actually amplify some of that bias. Some of Google's own researchers have criticized AI for this very reason. I'm curious what you're doing to make sure that AI is fair and ethical in its implementation.
That's a great question, Emily. Our big answer to this is something we're very concerned about, of course, and our big answer to this has been something we've been doing for a long time, which is we have a rigorous testing and evaluation process before we launch any new feature, any new AI system, or any new system at all for that matter. So it's not just AI focused, but of course every AI system also goes through the same rigorous testing and evaluation where we look at samples of queries from the broad query stream and from particularly sensitive slices to make sure that there are no concerning patterns, things like the bias concerns, things like misinformation. All of these things are things that we look for in this. And only when we have a lot of confidence that we see no such concerning patterns do we launch this. And that's a strategy that has worked very well for us over, I would submit it, over the last 20 years, but certainly over the last 5-10 years where we've really amped it up. And we'll continue to do this in the future.
Okay. Pandu Nayak, Google Fellow and VP of Search, thank you for giving us a view of the search future. Appreciate you taking the time to join us. Coming up, Gamefluencers using mobile games to promote your brand and build a following. TikTok has just released Sway Stories, its first ever fully in-app game focusing on two content creators with very large followings. We're going to talk to the influencer investment firm Animal Capital and TikTok star Griffin Johnson about the future of mobile gaming and their investing next. This is Bloomberg. Gaming, anytime, anywhere, and now TikTok is getting into the mobile game market too. The social media platform is partnering with the developer Playco to launch TikTok's first ever in-app gaming experience, Sway Stories. The concept is based off the popular TikTok Sway House, which followed the lives of prominent content creators on the site. For more on the future of TikTok games and if we'll see more like this, we've got Animal Capital managing partner Marshall Salmon and TikTok content creator Griffin Johnson, who is also one of the lead characters of the game and an operating partner at Animal Capital. So Griffin, we've got a few fans of Sway Stories on our team here. What can you tell us so far about how it's going and what engagement has been like?
Yeah, no, it's a pleasure. But yeah, Sway Stories has been doing great so far. The actual account itself, I believe, has about 20,000 followers, and the game itself has 500,000 likes and about 10 million views. So the engagement and the interaction so far has been great.
Marshall, you launched Animal Capital with Griffin and some of the other Sway House participants as a way to bet on Gen Z trends and things that maybe traditional investors were missing. Do you see this as a bet on extending life into the metaverse? Where do you see this going?
Emily, first of all, thank you for having us as always. It's nice to talk to you. We're happy to be here. It's a layered question, right? I think this is actually a stat that Griffin gave me recently, but I think Gen Z is spending about 7 hours a day on their phones, and that's doing a mix of things, right? That's got a podcast in their ear and flipping Instagram and then flipping to TikTok and then also playing games. We are very, very long Gen Z's entrance into the metaverse, and really all that means. That doesn't just mean the classic definition of putting AR, VR goggles on and participating like in some sort of a Sims reincarnation. We think that things like this that extend our relationship and Griffin and Josh's relationship with our audience are really, really compelling and are ways for us to just stay in closer touch with our fans.
Griffin, you've got 10.7 million followers on TikTok last time I checked, maybe a few more after today, a few million more on Instagram, Twitter, and YouTube. How do you see extending your brand, your TikTok profile into life in AR, VR, and mixed reality?
Yeah, something that I've always tried to do is keep up with the trends. And I know it's funny to say that because it's basically and is my career essentially. So for me, I just hope to keep up and, find different ways that are authentic with my audience and cool ways to extend out, because when they see me on the screen or YouTube or TikTok, they might feel a little bit out of touch, even though some feel that they do know me. But it's just that this allows them to connect with me on a different way. And, it feels a little bit more personal, in my opinion.
A lot of aspiring influencers and existing influencers out there are wondering how they can do more to profit off their brand. And I'm curious what you can share with us about how you're profiting financially from this venture and, how it's extending your reach as an influencer. For those who want to know, how can I do this too?
Yeah, financially, it's always great. A game like this, I'm not really concerned with that, and I haven't got paid yet for it. I'm not really looking to do that, but it's definitely going to be a different way to bring my income in. But more importantly, like you said, it allows me to extend my following in a great way. There's people engaging, people talking, people interacting. In the YouTube world, I've seen that I've never noticed or had been mentioned by them before. So I think for me, that's how I'm going to see profit more than anything is reaching and expanding to new audiences.
So hang on, are you not sure you're going to get paid? Or are you doing this, you're thinking you're going to get paid, or that just hasn't happened yet?
We aren't necessarily... Sorry, go ahead, Greg.
No, I was just going to say I haven't been paid for it yet. Obviously there will be a payment in the future. But I'm not exactly sure what it is yet. But we're working on that, and we'll figure out a way to get paid for sure.
All right. Marshall, I think a lot of influencers sort of grappling with, making these kinds of business deals. And I'm curious what you've learned so far since you started the firm. You've been betting on these trends, everything from, consumer technology to plant-based food to, energy drinks. What have been your biggest takeaways so far?
I've got a few. First, I'll just mention we are investors in Playco, the platform that developed the game. So we have a significant financial incentive, and we're sort of developing the best way to charge or not charge fans. But Griffin's point's exactly the right one. We really think that finding a new way to engage with our audience is somewhat benefit enough for them, because it is we are seeing bumps in their followings and in their engagement across platforms, which is in the last couple of weeks due to Space Stories. To answer your question more directly, for us, we really see that the core mission of Animal Capital, which I think I might have said to you last time we were on, was to invest in things that are making people's lives better and more fun. And we continue to stick with that as our core ethos. So whether it's a consumer tech platform like Parallel, which is the first telehealth platform that is able to diagnose dyslexia, or it's Dough, which is a vegan cookie dough based out of LA that is heading into Target and into Whole Foods across the country. We're really looking to improve both the lives of the audience of some of the companies that we're invested in, as well as the founders. And honestly, I'm really just thankful to Josh, Griffin, and Noah for being as engaged and unbelievable to the founders and to our investors as they have been thus far.
Marshall, I'm curious for your take on this story that's developing out of Aussie Media, which is a sort of young, aspiring media platform. I know you used to work at Goldman Sachs, and they had a conference call with the folks at Aussie, and one of them was apparently impersonating a YouTube executive, feigning traffic and views that didn't exist. Now you have the FBI investigating and YouTube investigating, and it certainly opens this idea what's real and what's not here in this world where everything's going viral. What kind of an audience is really sustainable and truly exists? How do you think about that question, measuring your true reach?
Sure. We talk about this constantly, right? And to specifically speak about the sort of Aussie Media incident, or Aussie Media Gate, as I feel like it's eventually going to be called. What a stupid thing to do. As an investor, as an advertiser, you're often, and 99% of the time, entitled to some of those back-end metrics. So you can lie about it or have someone impersonate a YouTube staffer on a call. They're going to get to the bottom of it if they're doing their diligence properly. And unfortunately, I think that Aussie Media probably has a pretty tough ending coming up pretty soon. To answer your question, really, engagement spans a bunch of things, right? I think that when you talk to advertisers of consumer products, for example, that are paying Griffin tens, if not hundreds of thousands of dollars to post for them, their expectation is that people are going to make purchasing decisions. Other times it's views, and Griffin will post, and has done this recently, has posted a new artist behind one of his TikTok videos, and that artist is seeing significant streams, and we have an equity relationship with that artist because we love the artist, we love the song, and we think that working together between sort of social media platforms, creators, as well as musicians to sort of break out into the into the mainstream it's a part of what we're doing. So each thing that we're looking at is different and something that we have to kind of consider when we're talking about engagement.
Okay, Marshall Salmon, Griffin Johnson, Animal Capital. We'll keep following what y'all are doing. Thank you so much for sharing that with us. Coming up, we're going to talk about EV maker Lucid Motors making strides. Hear from the CEO of Lucid next. This is Bloomberg. Electric car maker Lucid Motors is set to begin delivering its $169,000 sedan next month. Shares jumping on the news. My colleagues Alex Steele and Guy Johnson spoke with Lucid CEO Peter Rawlinson earlier today.
What really matters right now is getting the quality right, not getting rushed into just driving numbers down the line, making sure that each customer receives a great quality product. And then we're on track to ramp up to 20,000 units next year with a target of 50,000 in 2023.
I think in your SPAC filing, Peter, I just want to kind of push you a little bit on this. You said 577. Is it plus or minus 577?
We're pushing like crazy as a management team to achieve the 577. We're giving it all we have to get there, and we'll be able to give you a much clearer indication of how achievable that is when we do our first earnings call for our third quarter, which will be mid-November.
The risk that the supply chain problems impact you on that?
Well, what has impacted us, and I've said this many times, is that we've been hit with the impact of COVID in our supply chain for quality of parts. And without quality parts, we simply can't build a world-class quality car. We're absolutely committed to that. So we have the aftermath of COVID to deal with for our supply chain, and it's really supply quality issues.
Peter, you talked about last night, which sounded great. You talked about having a Dream Drive event. I think that's going to take place on October the 12th.
That's right.
What is the Dream Drive event? What is Dream Drive going to be?
Well, Dream Drive is the name for our autonomous and ADAS system, advanced driver assistance system. We have perhaps the most advanced system in the world today, with 32 sensors integrated into the car, including 14 cameras, short and long range radar, and a 120-degree solid-state LiDAR system. So we'll be rolling that out to the world on October the 12th, preceding customer deliveries.
In order to get to where you need to get to in terms of your targets, how many people are you going to hire to do that?
Well, I mean, we're approaching 3,000 people in the company now. And actually, I always say I'd rather do more with less people. I always believe that it's my job to create a critical mass of intellect rather than just sheer mass of numbers. Give me less, more brilliant people to achieve that. But that said, undeniably, we're really growing our footprint here, particularly in Arizona, bringing in jobs into the state, great high-tech manufacturing jobs.
Lucid's CEO, Peter Rawlinson, there with my colleagues, Guy Johnson and Alex Steele. That does it for this edition of Bloomberg Technology. Make sure you tune in tomorrow. We're going to be joined by Adam Kovacevic from the Chamber of Progress and Lori Siegel from ... Media and Wells Fargo's Mike Mayo. I'm Emily Chang. This is Bloomberg.